Hello, 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 hello. Welcome to Radio Free Wall Street. I'm so glad you're here. And I'm not going to talk about Donald Trump. No, please go away, Donald. No, it's Donald, please. You remember the poem, The Raven? No prayers could soothe him, no words remove him. That's Donald. Please, Donald, leave me alone. I'm so go. Anyway, we had other events besides Donald Trump trying to reinvent the English language and practice spin control. And that is, we had the Federal Reserve guy. And he gave testimony. And that is mandatory for me. When that guy speaks, I listen. Okay? And I know it's all carefully worded stuff and Fed speak and all that, but that's okay. I understand Fed speak. And the bottom line is this, the most important thing. The dollar rally, which I expect, we were into trades that see a stronger dollar and a weaker euro and a weaker pound, especially, and I'm very happy with those trades. But there's also another part of this that's very important to me, and that is the yield curve, okay? And as you know, we live and die on the yield curve, 30-year bonds, Treasury direct. Sometimes we don't talk about it enough, but, you know, although we do a lot of really highly speculative cowboy Indians walk on the wild side stuff, we also maintain that you should have a very strong bond portfolio and zero coupon bonds. You should have money at Treasury direct. You should have money and cash in your mattress, and then you've got a world that's complete, right? Out of debt and all the following. Now, the bottom line, what I want to tell you is that we are headed for a massive recession. We're headed for a recession that is going to become a depression as a direct result of the trade wars, okay? In other words, you get a recession, they're bad enough. But you add a trade war that's cutting down business, and reality is that we are going to head to an inverted yield curve as we are in the middle of a trade war, as businesses see less business, less money flowing, less goods and services across the border, and less profits, right? You got to sell something, make something happen. Nothing can happen until someone sells something or someone buys something. And that's what trade's all about. Now, you remove that, and you remove business. And you remove business, you remove profit, you remove jobs, you remove prosperity. Let's do a 1, 2, 3, duh. So trade wars are stupid. No winners, no losers. Now, you can cost more economies more than others, but destroying your trading competitors' economy so they can buy less from you is not smart business. Okay? So away we go. Now, let me explain to you what's going on here. The Fed has made it very clear that its inflation's at its target figure, which means that they're justified in raising rates. Unemployment is full by their measure, and it is by their measure. And they are in what I call the algo trap. In other words, their econometrics, their algo, their doctoral theses, assholes are seeing what they need to see to encourage them to go along. What they aren't seeing is the fact that banks hide things. See, reality is when banks go broke, well, they've been broke a long time before they went broke, okay? If you've ever been involved in business trouble, you know what I mean. You don't want your wife to know, your employees to know, and the last guy you want to know is your bankers. When banks in trouble, the last guys they want to know is Treasury and the Federal Reserve, okay? And they are so big and so impossible to regulate, so impossible to examine, that is a pretty easy job in this world we live in. I can tell you that structured debt products are going tapioca left and right. I can tell you that trading desks on bonds, on corporates, are shitting on themselves. I can tell you the fun guys are not turning profit, but shh, don't tell my daddy. Don't let anyone know. It's a secret between you and I, because who loves you, baby? Reality is that the bond market, the Treasury market, is already becoming distorted, okay? We've got a situation where, you know, we've got basically a peak in the economy that is corresponding with a yield curve and an equity market that will trash. Yield curve goes first, equities come second. Okay, the reality is that the yield curve is now flattening, and the 2-year yield is going to rise above the 10-year. And when that happens, you are in a recession. Now, the 2-year yield is trading at 2.61, while the 10-year yield is at 2.85. 61, 71, 81. Algo, what's 61 minus 85, buddy? I don't understand 85 minus 61. By the way, Yeah, okay, you're an asshole. He's laughing back there. Anyway, it's very little. 0.24 basis points for a yield curve that is in the death plunge, end of mankind as we know it. World comes, and even Donald Trump won't be around anymore. Yay! So we are in a situation where I follow the 2-year. If you're on our trading software and you've got our Financial News Network, we have that 2-year on there so you can see it. And it's warning, it's flashing a warning sign that, oh no, Mr. Will Rogers, we're headed for the yield curve death plunge. I love when that happens. I've made my money dancing on the yield curve, okay? And I love my zero coupon bonds, Principal Porsche. I know you're going to love them more than ever. Who loves you, baby? Well, now you got a situation where, yield curve is going flat, and flat yield curve then goes the next step. Why? It's inverted, and when it's inverted, it's like, dive, 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 and the Christmas tree turns green, the hatches are shut, and bye-bye goes the economy. We're real close to that right now. And I can tell you that smart people, and there are not a lot of them anymore left, but the ones who are left really know this. Remember, bond traders trade bigger volumes, bigger numbers, and they're smarter. The biggest loser-boozers are the fun guys. It's like fun. And the stock market guys, because remember, you're not smart, stupid. It's a bull market, And we're in a situation where the 10-year yield, which has dropped, is yielding more than the S&P 500. Another warning sign of a wipeout. And, that's been a 35-year trend, by the way, so ain't nothing rare. Now, the Fed is trying to figure out where the neutral rate bias is. And then they kind of work that backwards. It's one of the classic mistakes they always make, and they always get it wrong. And all I can say is, thank you, Mr. Fed guy. Thank you for screwing this up so good. You are so cool. And right now is a classic example. Now, the deal what's happening now is that now they're using algorithms, and they're using econometrics, and they're using all kinds of shit to tell them this time is there. It's really kind of interesting. Let's convince ourselves that it's not going to happen this time. Let me tell you why they have to convince themselves. The Fed is walking on the wild side. They have got to raise rates. Yield curve flattening, yield curve not flattening. Recession, going to have a recession, don't have a recession. Their problem is they got no choice. They are in the game. Okay, and they're in the game, and they're going to have to raise rates, and everybody knows, including them. Now, what they want to do is jerk everyone else off and tell them it's not going to happen. And answer is, yes, it is. And yes, it's going to be a big disaster. And yes, there is no way around that, my Fed buddies. Okay, they can't change this. So the best thing they can do is bullshit themselves and you that it's not going to happen. And when it does happen, they'll pretend like they can fix it. Now, if you understand they can't fix it, you understand it can happen, then it's pretty easy. It's like, get ready for a recession. And this is going to be a big one. And this is going to be an ugly one. And this one will be worse than any other one we had. Why? Well, we're 10 years overdue. You've had more Fed stimulus. Now, remember, you understand the problem in a democracy and the problem in our capitalist system is that if you give people endless money, they'll borrow endless money. And the cheaper the money is and the longer you give it to them, the more dumber and dumber shit they do. And eventually, dumb shit takes over. Now we have dumb shit ruling the day. It's the time of dummies. It's the time of idiots. There is so much bad debt. There is so much bad structured debt. There is so much in products that are going bad that it staggers the consciousness. And would I mention that the idiots are roaming around the marketplace? Now, the nice thing about idiots are you can make a lot of money from them. If you understand the idiot, no, seriously, if you understand the stupid money, and you truly understand at a gristle level, I can tell you that they can make you very wealthy. They really are working very hard to make you a lot of money. Now, when you realize that, you go, oh, shit. And you plan for it. Now, I admit the first couple of recessions really kind of caught me stupid. But, after I figured it out, oh, man, it's like, no, buddy, I ain't buying this shit. Oh, the economy's very solid. And we have fantastic instruments and blah-de-blah-de-blah. And we have new tools and all that shit. I've heard that every time in my career. It never ends, and it always ends the same way. The majority of people do not understand it's a recession. They have debt loads that kill them, and I get to buy their shit at 10 cents on the dollar. I don't buy retail. I buy distressed. Okay? I buy my mansions, my cars, my yachts, and my planes distressed. And this idea that you buy at ridiculously high prices and then find an idiot to buy more ridiculously high prices, it don't work. It's just not going to work. And at some point, when you realize that, you go, oh, man, thank you, baby, honey, child. And I'm trying to give you a tip. We're headed for a recession. We're headed for a debt wipeout. Or we are headed for a real estate wipeout. And the one I love the best, Mr. Harvard MBA pompous prick asshole. Oh, Worthington Business School, please. $1 billion. Oh, you're managing $1 billion of other people's money? Oh, good. Come to daddy. He's like, uh-oh. I really like the part where you put him out of business, rip him a new asshole, and then you meet him somewhere. You're that guy. Well, no, I'm just a prick. You're the cool dude. You're the one that's, remember, I'm a piece of shit and I don't deserve to breathe your air. Well, please fill up my water glass. I love that. That is so cool. Sometimes I go looking for him. It's true. Yeah, I have been known. Where is John these days? Anybody seen John? Oh, John. John. And you go, life's been good, huh, buddy, so far? You want to know the really cool part of it? Them trophy, those Barbie dolls, they never last. I mean, if you got yourself a Barbie doll and you go broke, there's no Barbie. Barbie ran off with Ken, put her back in the box, she's gone. Barbies don't last. Barbie's not the type of person to stick with you, okay? It's strictly Good Time Charlie. And the reason why is a couple Barbie guys I know this weekend. Yeah, your box is on the front lawn. Don't even come to the door, and nobody give a shit if we sign for it. And you'll be hearing from our attorneys and go, uh-oh. On the airplane to Costa Rica, it's not... By the way, John, come closer. You remember what happened with Enron? You remember that, right? Okay. I know you skated out. You did very, John, I'm proud of you, buddy, yeah. But this time, Costa Rica's not going to be far enough away. Oh, yeah. Guys, it's called dancing all over the spread, okay? Let me tell you. Spreading is, let me put it this way, a complicated business. And if you don't get it right, it could really ruin your day. And let me tell you about that shit. It gets real ugly real fast. You go from $12, $13 spread to like $4.85.90. It's like, you're done. There's no bullshit. There's no rip-a-lapa, no explanations necessary. Look at the loss, and then you go, I don't want to book it. You got to book it. And then you fold it up, and then the spot comes apart on you. And then you go down, in there, and you go like, contango? Try inverted, baby. Heard of upside down pineapple cake? Well, that's what you got in the oil market right now. And that's what you're about to have in the treasury market. And that's what you're about to have interest rates. And, oh yeah, higher rates are really good for us at Slayers. Yeah, get to charge more. No, bullshit. You don't get to charge more. You locked in the long. You borrowed the short. Your short interests are going higher. Don't bullshit anybody but yourself. And the long people, you can jack around on rates. They can't pay you anyway. So doesn't make it. You could charge them 1 million billion basis points over prime. They ain't got the money. And they say, well, we can't get blood out of turnip. Yeah, and that turnip juice, that ain't gonna do no good. You can't have a juice fast with that shit. You're done. Bye. Goodbye. Okay. So, you see, you guys live on blood. And when there's no blood and you got turnip juice, you can't survive. And that's when, oh, by the way, the Faz goes, oh, banks are broke. Rocket launch, Actually, I think they have a countdown. It's like, and they light the fuse on the thing, and it's like, uh-oh, bye-bye bonzo. So I just want to point out to you that it's really ugly out there, and they have really grossly miscalculated, and really, 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 truly, you're going into recession, and really, really, truly, the Fed knows it, and really, they can't do shit about it, and then you got Donald. Now, I told you I wouldn't talk about Donald and his Russian connection, or any of that stuff, so I'm not, but let me say this to you. Starting these stupid-ass trade wars in the middle of a coming recession with the yield curve inverted, That's about the dumbest thing he's ever done, including with the Russians were pretty dumb. Having his girls piss all over my videotape, that wasn't the smartest thing in the world. But when you really get dumb, that's starting a trade war with everybody, making steel great again. That was pretty friggin' dumb. And so you're basically going to throw the world into a debt crisis. You're entering into a recession. The yield curve, well, let me tell you, a few basis points ain't enough in this game, my friend, between the 2 and the 10. Oh, yes, baby. As I pointed out to you, the 30-year, 20-year, and 10-year have peaked. They're coming down. And the 2 and 5-year, well, let me put it this way, it's going to go higher. And then they're going to be, you know what's really happening, you know what's really exciting? It's almost like a sexual experience. When you get the 2-year above the 10-year, oh, my God. Now, when you get the 2-year above the 20, but when you get the 2-year above the 30, no. I mean, that is so cool. Now, I admit that, being a bond trader, I get excited on some really strange things. But when you understand the money involved, you're going to get excited too. Oh, my God. There is no chance, as in zero, as in none, as in nada, nunca, no way, Jose. There is no way to come out of this thing. There's no way. There is nothing that can be done. 10 years of the cheapest interest rates ever. You don't believe the bullshit. Well, the Fed's under control here. And if we sense the yield curve is going to invert, we're going to stop. Bullshit. You ain't doing shit. You're not doing anything. You have no choice. You're on the treadmill to hell. And higher the rates got to go in the short term. Recession, no recession, depression, snowstorm, zombie uprisings. There is no escape. And everybody knows it. Everyone knows it. Everyone knows it. We are 12 months away from the biggest shit wipeout ever. Oh, no. Thank you. And I want to say anything to you that I want to appreciate all the work of all those scumbag bankers to screw their depositors. Thank you. Wells Fargo especially. And I want to thank all the structured debt guys. Appreciate the wipeout. Thank you. Oh, did I mention I want to thank Goldman Sachs especially? Blackstone. Oh, yes, BlackRock. Yes. Yes. Oh, yeah. Oh, Fidelity. Another good one. Yeah. They got so much shit. They got so much bad paper. They've got so much crap. Oh, by the way, nothing can stop it. By this time next year, the talk of the recession will be pretty common, okay? And we'll be talking about depression, and they'll talk about a depression, and then we're going to get to depression. When the depression happens, a couple, 3 years from now, take the money and run because there'll be nothing else to do. That's game, sets, match, party, over. Oh, my God. Recession is here. By the way, let me tell you something. You want to hear something else again? Now, don't let Algo guy hear this. Those mathematical model guys. But the real money guys, I mean, the serious people, not these joke assholes that are called fall guys. The real player, they know that. The serious money knows that. Do you want to know why? Because they use that, recessions and bankruptcies and wipeouts and property defaults and people going losing everything, to take their money. You see, the recession and depressions that happened, you're not going to believe this. Come closer. It's not a mistake. They do it on purpose, right? And if you think about it, every time you hit one of these things, more and more people are affected. More and more people get poor, and you go, thank you. Thank you. Thank you, thank you, thank you. Now, don't forget to say thank you. And then the wipeout happens, and then the people, oh, I didn't know the market would get down like this. We're so sorry. And then they kind of tell you some bullshit. But, if you invest for the long haul, you go, invest for the long haul? What are you talking about, douchebag? In the long haul? They actually convince you it's a long haul? Yeah. The long haul means give us time to throw out all the shit stocks that are wiping out and put new ones in there and fool you. The guy goes, well, how come my money never came back? He goes, because it's not supposed to. And then you give me a 1, 2, 3, duh, and I love it. Okay? And this coming recession, this coming depression, oh, my God, it is going to be so. You want to know why? Because you've got the most leverage ever. I mean, I actually, people have me, you think I should put my money in a 30-year bond in Treasury Direct? Yeah, I do. Well, Slamma-Jamma at Blackstone's Shamma-Jamma Fund, he says that I got to make my money work for me, and I got to I love this one. You got to make your money go to work so you don't have to. Well, if you don't have no damn money, it ain't working either. You got to have a vacation. It's called a wipeout. People buy the shit. You sit there and you go, nah. No, you're not that dumb of a rock, are you? You really believe that shit, you know? Yep. I actually have people laugh because I think money should be in Treasury Direct, and I think it should be in, 10-year, 20-year, 30-year paper, and locked up for the long haul. Meanwhile, slamma, jamma, ramma, bama, bama, hamma, hamma. Yeah, I want you to come down here to Venezuela and buy some of these high-yield bonds here. And the one I love, though, do you know how many people are sitting on Venezuela, 100-year non-call, 100-year bond? And you go, you bought that shit? I actually know some trade. You went into Venezuela bond at the wipeout? In Argentina? Well, I enhanced my portfolio. You wiped out your customers. Well, I don't give a shit. I'm out of here. I got my bond. Really? They don't care. Here's a newsflash. Yeah. See, they wipe out your money to make their money. You know that? Yeah. You see, the games like this, they're not in it with you together. You don't understand. You're the lemon to be squeezed. Okay? You're the tuna for the tuna fish. You're the enchilada. Is this kind of making sense to you? You're the hamburger patty. It's like, sliced and diced. Oh, yeah, you didn't know that? Well, here's your wake-up call. Wall Street's getting ready to cut you a new asshole. They're ready to crash the stock market, real estate market, debt markets, and let's suppose you got a lot of debt. Well, you're wiping out. Now, suppose you don't have a lot of debt and you're buying the debt assets. See, the debt assets of others in a recession is your liability. See, now, when you buy a debt asset, okay, they put it on there on the right side of the letter, and that's called an asset. But in a recession, that asset becomes a liability, and here's this, you don't believe this. 1, 2, 3, you lose money, lose as in duh. So, the yield curve's inverting, but it's really good for us because we get higher. You don't get higher fees. Who's bullshitting you? That yield curve takes your 10 down lower and your 20 down lower and the 30, as you are seeing, and it takes the 2 and 5s higher and go, woo, ooh, my money's gone, woo, oh, my real estate's gone, woo, I got a tent at Walmart in the back of the car. Now remember, try to stake out the best dumpsters. If you buy into this BlackRock and Vanguard bullshit that they're giving you, you ain't gonna have nothing. Okay? And let me tell you, here's the real thing. You want to know something? They know it. They know the yield curve is flattening, and they know it's inverting. And they actually, by the way, I actually know guys that are placing a bet on when the next recession is going to be officially recorded. No, seriously, they're oh yes, Mrs. Jones, we have some fantastic high yield products that will really enhance your portfolio and guarantee your retirement. Can you use $10,000 a month check? Yeah, I think we can write a slam and jam of fund for you. Guys are laughing. They'll go. Seriously, they hang up the phone. They'll laugh and go. You know how they decide what fund? Your money manager. Money manager. Okay. Yes, we manage money for you, and we want to ensure you're. You know how they decide what they're buying you? Are you ready for this? They buy it by selling it to you. Then it's simply the one that runs a contest, on social media, to them, and gives you the biggest shaft in the world, and gives them the biggest commission. See, he has no obligation. Listen to me. That little broker guy, that 30-something, he thinks you're an old fart, and he's okay to wipe you out, and he can't afford a house, and he has nothing. Listen, the people you are taking advice from, they don't have nothing. They've never done anything. They've never traded anything. They're just talking bullshit. How does it decide the product for you, the structured product? Why, are you ready for this? 1, 2, 3. Surprise! Whatever offers him the highest commission, he has no fiduciary responsibility to put you in what's best for you. And so, he doesn't. Yeah, that's a news flash. Yield curve's inverting. The end of the world is nigh. We're heading to a recession. It's going to be a depression. It can make you a lot of money or lose you a lot of money. And you got to decide, do you want to make money or do you want to wipe out? Yeah, but no one else around me's talking about this recession. That's pretty radical stuff. Really? We had a recession every 5 or 10 years all your life. Did they tell you about one of them? Even one of them? Did they ever give you a clue?